Charlie Wells has been digging through the data and is here with the latest. What stands out to you, Charlie?
Tom, so what really stands out in these 13F filings is the positionings on tech. This is really where the smart money has been making moves and trying to figure out how they are going to navigate this rally despite the talk that we hear about a potential bubble. You can see here that the most significant weighting is in that tech sector, followed by financials and followed by health, consumer discretionary. But tech really in focus, and questions about that rally. If you just take a look at the NASDAQ, these 13F filings are required to be sent in by anyone who invests over $100 million to the SEC, and these are for that third quarter. So you look at the third quarter, you see that upward trajectory, but still questions really at month end in July, in August, and September. Questions there in the market. You see those spilling into these 13Fs as well.
What about some of the individual names, Charlie, and maybe what they tell us about investor appetite, the kind of themes that investors are looking to tease out of these markets?
So Bloomberg has gone through some 909 of these filings for hedge funds, and we've picked out some winners and losers as far as individual names. So Nvidia, really the winner there, up some $11 billion in that third quarter, followed by Alphabet, followed by Apple. I want to flip the board and take a look at some of these losers, some that declined the most in that third quarter. What you see when I bring up these names, they're also in tech. So winners in tech, losers in tech. We've got CoreWeave here. They had a very difficult August. Shares down some 21% in the day on the back of a disappointing earnings report. So we're seeing again here that theme of investors trying to parse this rally, but also take a look at some cautious moves there as well. Let's think about individual names and the funds that are often associated with them. We've got Warren Buffett. I want to bring up a look at these two funds. We've got Warren Buffett's Berkshire Hathaway building up a significant stake in Google, but then paring back on Apple. So that pattern of kind of stop-start there too. And I've got to bring up Thiel Macro, of course, associated with Peter Thiel. They, in that third quarter, exited their entire holding in Nvidia. So questions even about these firms, even about these stocks that have been on a roll lately.
Oh, you know that Peter Thiel move is going to get a lot of traction amongst retail investors, isn't it, in the US with exposure to Nvidia. Charlie Wells, thank you very much.
Ahead of Wednesday's crucial earnings announcement, Nvidia slips. Peter Thiel and SoftBank leave key roles at Nvidia. Despite rising insider cynicism, Wall Street is still optimistic. In anticipation of the chipmaker's eagerly awaited earnings report, which is set for Wednesday after the market close, Nvidia's stock fell more than 2% on Monday. The dip reflects general concern in the tech industry, with investors taking profits and repositioning ahead of what may be the most crucial earnings announcement of the season. The stock's decline, in spite of analyst optimism, highlights how erratic sentiment can be for even the most powerful companies in the AI market. The current debate is whether Nvidia's premium values, which have caused the stock to rise by almost 41% this year, can be justified by its fundamentals. There is more to Nvidia's earnings report than just another quarterly summary. The business is now the de facto barometer for the whole AI industry and the larger tech scene. For the third quarter, Wall Street predicts sales of $54.89 billion, or roughly 56% year-over-year increase, and profits per share of $1.25. The issue is that these and other figures have already been factored in by investors. Monday's sell-off points to growing concern that Nvidia would just meet, rather than significantly exceed forecasts. Nvidia has historically produced impressive earnings beats, but the stock is currently suffering from that record. A severe reversal could occur if you don't surprise to the upside. Technical analysts point out that the stock has faced resistance around the $200 level after failing to hold above it earlier in November. Even if the earnings report only meets forecasts, several analysts caution that Nvidia may drop into support around $165. The general market's continued apprehension is another obstacle. As investors struggle with worries over high valuations and indications of what some are referring to as an AI bubble, tech stocks have recently been under pressure to sell. In particular, semiconductors suffered on Friday, as ON Semiconductor fell more than 2% and Lam Research fell more than 3%. The abrupt influx of well-known investors pulling out is what's truly spooking Nvidia bulls at the moment. SoftBank discreetly disclosed last week that it had fully liquidated its $5.8 billion stake in Nvidia. A few days later, Peter Thiel's hedge fund said that it had sold all 537,742 of its shares, totaling $100 million and accounting for roughly 40% of the fund's equity holdings. Furthermore, the timing is really startling. The psychological pressure on Monday's sell-off was increased by the fact that these actions occurred just before Nvidia's earnings. Thiel has already expressed concern that AI stocks bear striking resemblance to the height of the dot-com bubble. His departure seems to be a clear indication that he believes the market may have gone ahead of itself. As if that weren't enough, Michael Burry, yes, the big short guy, has employed put options to take up substantial negative bets, clearly betting that Nvidia's stock is about to decline. All of this is made even more intriguing by the stark contrast with the prevailing Wall Street perspective. With price estimates ranging from $215 to $265, almost all of the major banks, including JP Morgan, Morgan Stanley, Wells Fargo, and Evercore ISI, remain firmly in the buy camp. However, it serves as a reminder that not all investors are convinced that Nvidia's growth story will continue to be unaffected when seasoned investors like Thiel and Burry deviate from the norm. And in the past, this kind of discrepancy between insider pessimism and bullish analyst calls has frequently served as a warning indicator prior to market corrections. Chip bottlenecks, AI prices, and whether rivals like Broadcom and Advanced Micro Devices are finally catching up have been the focus of Wall Street's attention for weeks. However, Jensen Huang has a new opportunity to remind investors of one uncomfortable reality as Nvidia prepares for earnings on Wednesday. This isn't a rivalry. Nvidia continues to lead the field in this race. The development of Nvidia is still in a different universe. In August, Nvidia informed investors that its October quarter revenue would reach $54 billion, a staggering 54% increase over the previous year. This isn't just acceleration, it's escape velocity. AMD, on the other hand, reported third quarter revenue of $9.25 billion, up a solid 36%. Yes, growing. Not competitive just now. Indeed, only 2 years ago, Nvidia was about AMD's size. Since then, its trajectory has looked like a straight vertical line, while AMD's remains at a gradual slope. The demand for Nvidia's next-generation Blackwell and Rubin chips is so great that it eclipses the company's $130 billion in revenue for the year ended January 2025. Huang shocked analysts at GTC in Washington by releasing $500 billion in commitments for these chips. Most of those commitments won't even hit the books until 2026. Analysts have already predicted that Nvidia will make $207 billion this fiscal year, and those estimates are becoming more cautious. AMD is now unable to close the gap caused by Nvidia's massive investment in future business, which is comparable to government-scale spending. Huang has not missed an opportunity to caution about the dangers of limiting Nvidia's sales in China, as well as the competitive threat posed by that country. Nvidia is still growing by more than 50%, even if it lost that market. On Wednesday, there will likely be additional discussion about China, as well as Nvidia's aggressive investments in potential clients. The story of AMD and Nvidia is presented as a conflict. The data presents a different picture. AMD is getting better. Nvidia is speeding up. And unless that momentum is broken, this rivalry will continue to be a one-sided story of dominance, with Huang appearing every quarter just to remind Wall Street of his already significant lead. According to Cramer, Nvidia's supply limitations do not affect demand. A modest turnaround is shown by Tesla's increasing performance. Early detection of these changes may allow investors to take advantage of unnoticed upside. Jim Cramer of CNBC has a talent for seeing things that the rest of Wall Street ignores. Cramer is focusing on something more basic, actual, observable execution, whereas the majority of investors are fixated on valuations and AI jargon. According to analysts, his most recent analysis of Nvidia and Tesla presents a contrarian argument that contradicts the general pessimism surrounding both companies. The crucial realization? These aren't overheated tech investments. They're companies with significant structural advantages that the market is still underpricing. What sets Cramer's perspective apart from the others is this: Nvidia is dealing with a supply issue rather than a demand issue. Cramer suggests something far more optimistic, while skeptics are concerned about stretched valuations and peak AI euphoria. Simply put, the business is unable to produce enough chips to satisfy consumer demand. This distinction is quite important. Supply constraints indicate that demand is real and sustainable for a business. Customers of Nvidia are lined up for more processors rather than fewer. In a market where profits are typically destroyed by overcapacity, the semiconductor titan maintains pricing power. Most tech businesses don't have that luxury. Cramer highlights that by concentrating just on the stock's premium value, many investors are committing a crucial mistake. They assume danger when they notice a high multiple. They overlook the fact that Nvidia's earnings power keeps growing. Cramer contends that the AI cycle is not stopping, which runs counter to the conventional thinking that the industry is reaching its zenith. Current profitability measures may only be the start of a lengthy growth runway if supply is limited and demand is strong. One narrative dominates the skeptic's attention: the boom is ending. Cramer observes the opposite course. He thinks Nvidia may still have more to run and that its fundamentals warrant the surge. Cramer focuses on the tailwinds that few investors are recognizing, while most investors are concerned about negative risk. The tale of Tesla is more about execution than chips. Cramer refers to the company's reversal as a miracle, following months of unfavorable press regarding competitiveness, missed deliveries, and operational difficulties. However, behind-the-scenes labor is necessary to accomplish miracles. Cramer points to three significant advancements. Operations are stabilizing, cost controls are tightening, and deliveries are increasing. These are actual operational measurements that demonstrate the business is performing better than the dominant narrative implies. They are not only theoretical ideas. However, the majority of investors are still trapped in a negative mindset, anticipating a drop when, in reality, the company is regaining momentum. The important thing to remember is that although sentiment remains low, Tesla's performance is becoming better. An asymmetry results from that. The stock is depressed in part due to antiquated beliefs rather than the state of affairs now. Investors may miss today's recovery if they are preoccupied with yesterday's issues. Cramer observes green shoots, which are the precursors of a more robust base. He thinks there is still more room for Tesla's recovery. This is significant because, for positioned investors, early recovery cycles provide the optimum risk-reward. Both scenarios show Cramer's key investment philosophy: seek beyond consensus and uncover where the market's narrative diverges from actual fundamentals. Nvidia's supply limitations confirm the strength of demand. The pessimistic crowd hasn't yet priced in Tesla's operational green shoots. Investors that pay attention to these structural indications might be able to outperform others who are mired in the negative news from yesterday. In light of the continued need for AI, Wedbush tech analyst Dan Ives anticipates that chipmaker and CEO Jensen Huang, whom he refers to as the godfather of AI, will deliver. Ives highlighted Nvidia as a foundational piece of this AI revolution, forecasting the company will handily exceed street estimates based on positive supply chain checks from Asia and robust capital expenditure data from major technology businesses in late October earnings reports. With projections that big tech capital expenditures alone would surpass $550 billion in 2026, and further growth coming from industry, government, and global adoption over the next 12 to 18 months, Ives thinks Wall Street continues to undervalue Nvidia's future performance. The forthcoming earnings release, according to the Analyst, might be a positive catalyst for tech stocks into year-end, and perhaps offer an important validation moment around global demand drivers' magnitude for the AI revolution, from Huang's point of view. Nvidia's performance coincides with ongoing trade disputes over China chip limitations imposed by the Trump administration. Ives estimates that for every dollar spent on Nvidia products, there is a $8-10 multiplier effect across the larger technological ecosystem. Ives said, "We think Nvidia's earnings will be a positive catalyst for tech stocks and another significant validation moment for the AI revolution." With the help of American chipmaker Nvidia, US-based cloud services company GMI Cloud announced Monday that it will construct a $500 million artificial intelligence data center in Taiwan. The new Blackwell GB300 chips from Nvidia will power the data center when it goes online in March 2026. About 7,000 GPUs spread across 96 high-density racks will be housed in the facility, which can handle almost 2 million tokens per second. It will need about 16 megawatts of electricity. Taiwan needs more data centers as strategic assets to help its AI growth, according to Alex Ye, founder and CEO of GMI Cloud. He also suggested that the island's power supply issues can be resolved. According to him, the company's GPU utilization is almost full, indicating a high demand for AI. You must first construct the data center and the AI cluster if you wish to support local ecosystems, he stated. The agreement coincides with global IT behemoths investing billions on AI infrastructure to handle growing workloads, which is a boon to semiconductor firms like Nvidia, which gets the majority of its income from these sales. In the past year, Nvidia CEO Jensen Huang has announced agreements to sell its most cutting-edge GPUs to projects in South Korea and Saudi Arabia. Huang has previously referred to these clusters as AI factories. President Donald Trump of the United States has stated that he wants American firms to be the exclusive owners of the best AI semiconductors, like Nvidia's Blackwell processors. Other AI infrastructure projects recently announced in Taiwan include a 100-megawatt AI data center project unveiled by Foxconn and Nvidia in May. An example of a GPU as a service provider and one of Nvidia's cloud partners already runs data centers in the United States, Taiwan, Singapore, Thailand, and Japan. Besides the Taiwan project, GMI Cloud aims to develop a new 50-megawatt U.S. data center and is aiming to seek an initial public offering in 2 to 3 years. When fully operational, the NVIDIA project is anticipated to yield a total contract value of roughly $1 billion, according to NVIDIA itself, cybersecurity company, Trend Micro, electronics manufacturer, Wistron, Chunghwa System, Integration, data infrastructure provider, Vast Data, and industrial solutions company TICO are among the first clients for the Taiwan AI factory. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.